We have Taher Badshah now joining us, CIO-Equities at Invesco Mutual Fund. Taher, hi, good morning. Thanks a lot for joining us. You've started your mid and small cap fund at the right time, I guess. The market giving you some kind of indication that the worst of the price damage in broader market is out of the way?
Well, at least from the point of view that we've got adequate time to think through our positions, think through our stocks, and buy them relatively comfortably during this whole phase of the last 6 months. So even since the time we launched, I wouldn't say that the mid and small cap market has kind of done much. It did show up for a couple of months, and then we've once again caved in. So net, there's not really much on the table from the point of view of absolute returns, but clearly that from a perspective of building out a nice and neat portfolio over the next 2-3 years, I think it has given us enough time, opportunity to think through and even buy given the liquidity constraints. So that's been the advantage of having launched it a few months ago. And yes, of course, it reflects our conviction that this is the right time, notwithstanding some of the things which are immediately lined up in terms of events, etc. Over the next 2-3 years. I think this is the right configuration of the market in which mid and small caps as an opportunity makes sense. So that's basically the faith that we are going ahead with.
Okay, just a minute. We've got confirmation now that Wing Commander Abhinandan will be handed over to the Indian High Commission in Islamabad today. The details are running for you. I think it's around noon, right?
It's being worked out.
Okay, exact time.
Yeah, we don't have a specific time, but the exchange is supposed to happen via the Indian High Commission in Islamabad. So that's good news coming through. Okay. Taher, just to get back to the market and the overall construct, I think auto is something that's top of mind for everyone. We know that the Feb numbers might not be very, very strong, but is this pretty much the tough? What are you doing with auto stocks? Are you looking to buy more?
Yeah, incrementally, I think we are getting a little more positive. We of course were positioned, so it is not to say that we were absent from the space. But the relative attractiveness of the space is now getting a little higher, and we know that we will still pass through a few months or maybe a couple of quarters, which may not look really very exciting from the point of view of headline numbers. But I think this is a space which generally has not seen such a sharp correction in the market for a fairly long period of time, and at least my memory. So I think we're getting that opportunity once in a long time to buy something, which is a couple of things have even turned reasonable cheap. A few other things are are significantly off their highs in terms of valuations. And I think this is, as a sector, still has a fairly decent amount of promise from a consumer discretionary point of view as a sector. So clearly our preference is there we own a lot of different names in many of our strategies. And I think both the ancillary as well as the OEM space is incrementally looking attractive. So yeah, there we are. Okay. as far as the auto sector goes.
All right. Good morning, Taher. You also have a small cap index. And that was the one that actually took your breath away, if you remember, the index in 2017. And then, of course, we had the big year of fall. I think it was the best performing index in the world, 60% up in 2017. How would you compare that? Do you think that has a better chance to outperform now, your own small cap fund?
I would think so. So that's exactly the notion with which we went into this NFO. And at that time in October 2018, we had seen valuations which were they'd started to correct, but even they had gone up to as high as 40% premium to the Nifty valuations at that stage. They were coming off. They had come off to more like a 10% premium by October. And now, as we see it, we are actually seeing the small cap index to be at a discount to the Nifty or to the large cap indices. So by a modest amount, but still it is now at a discount. So, and that's by and large the situation that what we saw even in early 2014 or late of 2013. So similar kind of conditions, similar kind of anxiety, similar kind of market, thought process. Pushback on small and mid caps and so on and so forth. So I think I see a lot of similarities from that year itself. And then we know what happened post 2014 up until at least 2017. So I'm quite confident that we are seeing number of individual stocks turn cheap. Many of them a lot more attractive now. And in this kind of decline, everything from the good quality as well as the not so good quality has got received the same treatment. So we have a lot more choice than we probably had at the early part of 2018. Where we are actually strapped for choice. So it's a big change in a very small period of time. Okay. And I think that's an opportunity.
Okay, I'm looking at your portfolio, and you have a lot of NBFC exposure. Correct me if I'm wrong, but it looks like you don't want housing finance. Everything else is there in your portfolio.
Yeah, so I think we've basically looked at more of non-monoline kind of NBFCs at one level, so that's the reason probably we've amongst the in the mortgage space in particular, we probably preferred more of the large cap positioning, simply because it's they'll be a lot better placed from the point of view of the liability profile. And whether we like it or not, many of these the smaller or mid-sized mortgage entities do have a fair bit of a LAP or real estate developer-related exposure as well, which may not be very comfortable at this stage of the market. So to that extent, I think we have kind of avoided that space because the implications from that part of the book could be quite significant one way or the other. So that's probably the reason that's essentially how our thought process has been as far as selection of companies for the NBFCs go.
But, okay, just quite separately, Taher, would you worry that the NBFC problem can still destabilize, a one-off accident, bringing more trouble to that space?
Well, I think we are kind of behind that. If I just look at it in contrast with, let's say, the banking sector related problem that we've been having for the last 3-4 years, which was a lot bigger, and a larger part of the banking space was a lot more stressed. On the other side, the NBFC is a relatively it's important.
That's a very unfair comparison.
But I'm only trying to say that.
No, that's unfair. They have safe liabilities and they have the sovereign's hand. So I would think that banks would never go under. They have the sovereign's hand. Here, again, there is another downgrade by CRISIL of DHFL. So I'm just wondering, anyway, your thesis is no accident. Okay.
No, I'm not saying there'll be no accidents. Only I'm trying to say that it is from an overall market perspective, I think it should be relatively a little more manageable. We are probably looking like being out of the crisis. Maybe the problem still remains, and we've seen some aftershocks of it as well post the first crisis that we saw. So I'm not undermining at the same time, but at the same, it looks like that probably we will manage this thing a little better than what we had to go as. Through the pain with regard to the banking sector as such over the last 2-3 years. So I don't know whether the pain will be as long drawn as what we had in the last 3 years.
Okay, by the way, we should be getting Bajaj Auto sales.
No, it's already here. It's about 10% rise in total sales to 3.93 lakh units. That's the overall sales. Exports are up by 37% and domestic has fallen. Okay, that's commercial vehicles, sorry. Commercial vehicles have dropped. Exports of commercial vehicles is up 37%. Motorcycles exports up 16%. So it does look like it's a very strong number. The overall improvement is 10%, which looks very good. Taher, do you want to react to this? It's a 10% uptick in Bajaj Auto's February numbers.
So I think as far as Bajaj Auto goes, they've been kind of reporting fairly steady numbers even in the last few months. And we'll have to look at the split. I'm sure exports would have probably played a role as it has been playing a role for some time now.
Higher.
But by and large, I would think it's okay. So that's good. I would think, given the expectations around this sector, I think it's a fairly decent number. I would think. Let's see. We'll have to observe some of the other players also in the market. So we'll see more of it today, I'm sure, when we look at the rest of the pack.
Okay, well, for the rest of the market, gains are intact, just a little off the highest point perhaps. It's really the mid-cap arena which is stealing the thunder. Almost a 1% up move in the mid-cap index. Lots of stocks flying. CG Power, SAIL. By the way, SAIL brings me to actually the point on steel. Taher, actually February itself was a pretty decent month for a lot of steel stocks. Now, do you have a favorable view on ferrous metals or in general metals?
We wouldn't say that we have a significant strong top-down view on this sector, but we have noticed a couple of pockets where value seems to be emerging. It is in all the commodities, of course, the call is a lot more. The relevance of the cycle on the call on the cycle is a lot more important here. But when we look at a couple of these bottom-up opportunities, they look like turning value. They seem to be significantly beaten down. Some of them have got even good cash on their balance sheets and so on. So they're trading at pretty ridiculously low multiples, even assuming that the cycle could probably worsen from here. So I think that's something which attracts our attention. But are we taking a call that we see a significant up move in commodity prices as of now or going forward over the next 1 year? I don't think we are in that situation at all.